Today we're going to talk about 3 reasons why you may want to invest in a health savings account. Hi, I'm Scott Frank, founder of Stone Steps Financial, a certified financial planner. Health savings accounts, if you don't know what they are a really cool savings vehicle for you. Now, it's called a health savings account, so of course that means health is tied to it. So let's back up just a little bit for a second. Where did a health savings account even come from? So you guys might remember that with healthcare costs going up, plans changed how much it costs to get a health plan. And these plans started to have what were called higher deductibles and higher premiums. And so basically what that means is the cost shift of a traditional plan just changed. And when that happened, Congress created this thing called a health savings account that we can save money into. Now what that means is we get to put money in tax-free. And then once it's there, we can actually grow it if we want to, or we can just go ahead and use it. So long as when we take the money out, we take it out for medical expenses that are approved. And most things that you would think of are approved. We can talk a little bit about that. Once you do that, you don't have to pay taxes. So it's actually a triple tax advantaged account, which is really cool. To be able to participate in a health savings account, you do have to participate in a high deductible, high premium plan at work. Or, if you don't have a work plan, you could see if the plan that you have through traditional health insurance allows for an HSA account as well. If you do participate in a high deductible, high premium plan, and your employer doesn't offer an HSA, that doesn't mean that you're not allowed to use one. You can still actually go use one on your own. You just have to work with your accountant to get the deductible. So if we just back up for a minute there for a second, and you think about the 3 reasons why it might make sense to invest in this. The first reason is the simplest, and that's just that, hey, I'm having to pay these higher deductibles in my plan, and that's going to cost me some money. So this year, a family can take up to $8,300 and put it from money that they haven't paid taxes on, just wages, into that HSA account. And then they can use those funds throughout the year for any medical expense. It's really that simple, and they don't have to pay any taxes on that. That's the first reason you could look to use an HSA. That's really a nice benefit, right? The next reason, if you don't need that money for your health expenses, if you have other cash that you can use to cover those expenses, this is where the benefits of the health savings account really come into effect. So now, instead of taking that money and using it every year, let's go ahead and take that money and let's invest it and grow it. And by doing that, we actually allow those funds to grow upon themselves and compound over time and become larger and larger dollar amounts. So very similar to investing in a 401k or an individual retirement account, right? And then once those assets grow, you can use them for other reasons. So now, let's say in the future, you've been keeping track of your health expenses and you lose your job. Well, in that instance, you could actually go back to the HSA company and say, hey, I'd like to have all these expenses that I've taken in the past. I'd like to have that redeemed right now, and I get that money back tax-free. So that's another benefit to an HSA. The biggest one to me, though, and it's the one that we use a lot at our firm, really using health savings accounts to help save for health expenses in retirement. So like right now, for instance, if you were to save that $8,300 a year, that's the max you can save for a family. And so and that number is probably going to go up for the next 20 years. Like with inflation, it'll probably go to 85 and 9 and so on and so forth. But let's just say it says 8,300 and you're a 40-year-old right now. So you're middle of your life. Well, for the next 25 years, if you put away $8,300 a year and you got an 8% rate of return, that would turn into about $606,000 when you're 65. And that can be really helpful for retirement. But one of the biggest things that people worry about in retirement is long-term care expenses. Like, what happens if something really catastrophic happens to me medically? Well, if we don't touch those funds, if those funds are set aside and we say, hey, we're just going to keep growing those for big health needs along the way. If we just, again, from 65 to 85, we don't contribute anymore because we're not allowed to once we hit Medicare age. It's one of the rules. But so long as we go ahead and we keep letting that grow, If it grows at that 8% rate, by the age of 85, it's worth about $2.8 million. And then those funds, you might think like, well, what if I don't need them for medical expenses? You're actually allowed to use them for normal expenses too. It just gets treated like a regular IRA withdrawal once you're over the age of 65. So tons of benefits to an HSA. One other thing to be mindful of is that most things that are medically related, you can use an HSA for to deduct those expenses. One of the things you can't is like normal insurance premiums, right? Like sadly, you can't do that. But once you're over the age of 65, you can use it for your Medicare premiums. You can use it for long-term care premiums if you have those. Another interesting one is that when you are working, if you have to go on COBRA because you lose your job temporarily, you can actually use it for COBRA expenses. So there's all kinds of reasons that an HSA is helpful. A little mechanic thing about HSAs is that they're actually what's called portable. And what that means is that an HSA account, you can actually, like, if you don't have good investment options at your employer's HSA, you can actually open an HSA somewhere else and you can port those funds over. So you can actually go get them in a place that's more beneficial to you. And that's something that like you can't, for instance, do with a 401k, right? 401ks, you have to just go with whatever the employer has until you leave that employer. So those are just a few bits about an HSA that I think are beneficial for you, and I hope you find this video to be helpful.